Hello traders, let's look at gold, what has been happening on there and what kind of opportunities we can have. So if you have been following my analysis, you know that this is a W pattern and the market has been falling to one of the priced levels here. And then since then it has been consolidating. Now this consolidation, by nature, can actually break out to the upside or to the downside. There are both cases. So if you want to find out what kind of levels it can actually reach in either case, you should refer to my previous analysis, and there I have gone through in depth, um, where it can go and under what conditions. So you should check those out. Now at the start of this month, at the start of this year, I mentioned very important point here, which was this. We had alternate candle scenario here. So bearish, bullish, and bearish, right? So at the start of this month, I said the market could be printing a bearish candle, and we are at the end of this month. We have one day left. Anything can happen. Even in the last day, it can completely change into a bullish candle. Anything can happen in the market, but so far it is following the plan. It is going alternate candles on monthly basis, and if that is the case, then what we can have is, let me clean this up. If this month ends as a bearish candle, and if another month ends as a bearish candle here, then there is a good possibility that dollar will go up. Okay, because that's how the breakouts usually actually happen, right? This is how this sort of 6 or 7 candle pattern actually works out. But we will have to see how this month actually closes. So Monday is the last day of the month, and that's why you have to be extra careful, because it's the last day of the month, but it's the first day of the week. So usually those kind of transition days are actually very important, because the market tends to have wild kind of moves. So do not try to jump into the trade unless you know what you are doing, right? So in this analysis, we'll see what the gold has been doing and what kind of levels we can expect. Right. So let's go to the weekly time frame. On weekly time frame, we had this W pattern, which we have been looking at for a long period of time. There was a lot of consolidation around 1843 level or so. In fact, actually, apologies for the last video. In the last video, I think I misspoke. I've been referring to 1800 levels as 1900. So apologies for that. But I've been pointing at the right location. So this is where the market was consolidating around 1843, and the weekly time frame was turning slightly bullish. Overall, it is still kind of bearish here, and it is getting squeezed. So it was turning slightly bullish. So we were expecting market to go up into 1850 FCP zone, which was around here, and market could actually fall back down from there. As I said, the market could be reaching into one of those zones, and we always read one level at a time. So if I bring in the original analysis, this is what happened. Let's come here. This was the W pattern here. This is actually a complex W pattern. Market consolidated here for some time, went higher, grabbed the liquidity around here, cleaned up an area here around 1843, 1847, around this area, and then started to fall back down. Now, this fall was very hard fall down. We were not expecting this to fall this much quite quickly, but this was actually this momentum was increased by parabolic move on DXY. The DXY actually went parabolic, which we were expecting. We were expecting dollar to go bullish, and usually it is not a scenario where the dollar and gold are always inversely proportional. They are inversely correlated. Sometimes they are, sometimes they are not, right? And this sort of correlation is getting weaker and weaker, so they can actually move in the same direction. But when this correlation works, it just works. So it was one of those days where the dollar went up and the gold started to fall down. Let's bring in the analysis now. This was the next level. I said when we were around here around 1837, 1839 area, I said the next level was going to be this one, which was 1850. So this is the FCP zone, and this area needed a cleanup, right? I'm talking about this area. This is a bad price action behavior, and this was needed a cleanup. Market came here, cleaned up a little bit, fell down. This FCP zone became support. So I said the market could be going bullish into FCP zone here, and we were reading one at a time, one level at a time. There was a trend line, there was an FCP zone here. So if the market was going to go higher, and give us a confirmation, then it was going to go higher into one of these levels, like which are at the top, right? So I said 1860 is 1873 and upwards, but this FCP zone never gave us a confirmation above it. So this FCP zone turned out to be the ultimate resistance zone, and the market started to fall down. Now, when the market was falling down, these levels were going to act as support. The market momentum was so high that it did not even stop at this FCP zone, which was going to act as support because it acted as support here, and this was previous resistance. It did not stop at 1828. It did not stop at 1812. It did not even stop at 1806, which was kind of a pivot level. It straight away went into this 1791 and 1782 area. Okay, so this is where we are right now. As I said before in my previous analysis, at some point in time, the market is expected to come to this level here, which is 1777, because this needs cleanup, and we are very close to it. Last time when it came here, it did not clean this up. So now I'm expecting that a market can actually have an opportunity to come down, clean this up, and form a bearish M pattern sort of thing here. So that is quite a possibility. So beware that the dollar can actually go bearish now, maybe this week, coming week, or next month. So that is quite a possibility. So let's go and look at these levels here and what could be happening. Now, if I go to the smaller time frame, what you will notice that there is a lot of liquidity available here, right, in this area. Okay, because there have been a lot of stop losses here. So the market has come there. Now, this has come very close to this. Again, the market could be heading into 1777, right? This is area. But one thing which is there in the case of bullish is this 200 moving average. The market came here, fell through it. Now it could go back up into 1806 area and test this 200 moving average before it falls down. So there are two cases what can happen. One, it can go up into 1806 and touch this 200 moving average and then fall back down. Ultimately, that will be the bearish case. And in that process, it will clean this up, or the market simply opens and starts to go down this way and come down to 1763. So in the case of bullish scenario, the bullish case is kind of limited here. If it actually goes beyond 1812 and performs and gives us a confirmation, then only we will look for further bullish movement. But the bullish momentum is bullish case is kind of limited in this case at the moment. So we are more looking for a bearish side of things. If it goes up, then look for a short. If it starts to go down, then obviously the market is going to go down, and in this process we will have a proper M pattern here. Okay, there is an M pattern in the middle which has kind of failed, so it can actually fall down a little bit further down. So in this process we will have, let me just clean this up. We will have an M pattern like this, and then the market can actually rise up a little bit. So my plan will be to monitor this, how this market actually opens. If it starts to rise higher, and if I get an opportunity, I will rise with this, I will go with this, and then go into 18606, this 200 moving average, or maybe at the most 1812, and then I'll probably close this position or monitor my position, saying partial profits and whatnot. If the market starts to give me a confirmation to the downside, and if it breaks through this 1782, then I'll look for a short. Okay, I will monitor this area, which is 1777. Okay, this area needs to be cleaned up. I'll probably take partial profits here because because the M pattern will be completed. So that's what I'm going to do. I will be watching it one step at a time. One more thing that you should be aware of is this liquidity area. If I go to the higher time frame, let me clean this up a little. Okay. Now the market is right here, and we are saying that this could be forming an M pattern here, and that can push the price up. Okay, so that is a possibility. However, you see, we have a double bottom sort of area here, so there is a lot of liquidity here. So ultimately, whenever this bullishness is finished, right, the market is expected to fall through this because there is a lot of liquidity and gold is going to fall to this level, and in that case we will have even a bigger M pattern. So we have this M pattern, and inside we have this M pattern, and inside we have this M pattern. So all of them. So trade what you see. Once the market has come there, again we'll look for a bullish movement. Okay, and then if the market continues to fall, then we are looking for this liquidity area again, because the market will be here, then here. And once this is level is gone, then we are looking at this level, maybe a below level below this area. So this is a like higher time frame structure, but right now we have a little bit of plan available here. So just watch out how it actually opens on Monday and trade one step at a time. And you also have some of those important levels available on this chart. I'll post this in you can actually take a screenshot here, or you can come back to this video, or otherwise I'll just post it in the Telegram group and other places. Right, I'll see you in the next one. Have a great trading week.